Hello, and welcome to U.S. Stocks, your essential guide to navigating the financial markets with clarity and confidence. I'm your host. It's Friday, October 3rd, 2025. We're officially in the fourth quarter, a time when market narratives are solidified and portfolios are positioned for the year ahead. The big question on everyone's mind is, after a year of navigating persistent inflation and the Federal Reserve's delicate balancing act, where do we go from here? Today, we're breaking down the U.S. stock market's latest pulse. We'll cover the consensus price targets for the S&P 500, dissect the current investor sentiment, and provide a clear-eyed outlook for the remainder of this year and the start of 2026. Part 1. The Market Snapshot and Price Targets. Let's start with a snapshot of where we stand. The S&P 500 is currently hovering around $2,271. This comes after a period of consolidation in the third quarter, where the market digested the significant gains from the first half of the year. The key driver has been the battle between strong corporate earnings, particularly in the tech sector, and the headwind of interest rates that have remained higher for longer, just as the Fed signaled. So, where do the major Wall Street firms see the index heading by year-end? The base case. The median price target for the S&P 500 for year-end 2025 sits right around 5,750. This assumes a soft landing scenario and moderate inflation decline. The bull case. Optimistic analysts are calling for a finish at or above 5,900, driven by Fed rate cut expectations and continued corporate earnings surprises, especially from AI investments. The bear case. Cautious analysts target a slide back to 5,400, citing high interest rate lag effects, weakening consumer credit, and potential geopolitical risks. In summary, the market is priced for a soft landing, but the path of least resistance isn't clear. Part 2. Dissecting investor sentiment. Investor sentiment is best described as cautiously optimistic. The extreme euphoria from early 2025 has faded, replaced by a more discerning and selective mood. The CNN Fear and Greed Index has been oscillating firmly in the neutral zone, occasionally tipping into greed on positive data, but quickly retreating. Investors aren't running for the exits, but they're also not blindly buying every dip. We're seeing a clear divergence. Bullishness remains in AI infrastructure, cybersecurity, and next-gen biotech. Outside these areas, sentiment is subdued. Companies that miss earnings, especially in cyclical sectors like consumer discretionary and industrials, are being punished. The key takeaway: the market is no longer a monolith. It's a market of stocks. Quality, profitability, and clear growth paths are what matter now. Part 3. Future Outlook, Key Themes for Q4 and Beyond. Looking ahead to Q4 2025 and into 2026, there are three dominant themes. 1. The Fed's final act. All eyes are on the Federal Reserve. The timing and magnitude of rate cuts will be critical. CPI and jobs reports over the next few months will set the tone. 2. The AI monetization test. 2025 is about seeing real revenue from AI investments. Q3 earnings season will separate true AI winners from pretenders. 3. The resilience of the consumer. Spending is moderating but not collapsing. Watch retail sales and corporate outlooks. A strong consumer supports a soft landing. A slowdown triggers the bear case. Part 4. How to position yourself. This is a market that rewards discipline and patience. Focus on quality, strong balance sheets, consistent cash flow, blue-chip stocks. Stay invested in secular growth themes: AI, semiconductors, cloud computing, and enterprise software. Don't ignore value and dividends. Higher rates make steady dividend yield appealing. Expect volatility, but fundamentals remain intact. Focus on trends shaping the future, not daily noise. Thanks for watching U.S. Stocks. Don't forget to subscribe, like, comment, and share to stay updated with all the latest market insights. Stay informed, stay disciplined, and stay invested.